Tesla due to report first quarter deliveries today. We're expecting a decline in deliveries. Joining us right now is the Wall Street Journal's tech and autos reporter, Tim Higgins. Tim, good to see you this morning. Thanks so much for being here.
Thank you.
Let's kick it off with Tesla. What are you expecting in terms of deliveries? How would you assess the company's performance today?
It's going to be kind of a messy quarter. We've already been guided that it's going to be down. Analysts are expecting it down maybe 18% from the fourth quarter. And that's in part for two reasons. A, Tesla has suggested there was a pull forward of sales in the last quarter, in the fourth quarter, because phasing out of federal tax credits, people rushing to get those cars. And then B, they're shipping the new Model 3 to Europe and China for the first time. And it's been, by all accounts, a messy and difficult process as they use their California factory to build those cars and then ship them overseas.
Tim, Lindsay Bell here. I find it interesting. This always used to be about production with Tesla and the numbers on production. And now we're moving to the delivery story, as you mentioned, some of the hiccups that they're having there. But Elon Musk tweeted over the weekend that amazing work by the Tesla delivery team, especially in Europe and China. Anything to make of that, especially as he's coming up on a court date, with the SEC on Thursday about his tweets and being held in contempt there?
You're right. The question really has been for a number of weeks now is what exactly is the company projecting for sales and production this year? There's been a couple of statements out there, and most recently it seems like Elon Musk is suggesting he thinks that there's demand for about 500,000 Model 3s. The question that I think a lot of analysts have is at what price point? The company's been selling them on average last year for about $57,000, but in the last few months, Tesla's been pushing to bring that price down to $35,000, which has spooked some investors who are concerned perhaps that they've peaked on that price, that there's not as large a market for the more expensive, more profitable version. Now there's a rush to get that price down.
Tim, good morning, Mitch Rochelle. One of the things I noticed about the Model 3 is that 29% of all Norwegian cars are the Model 3. So, I mean, is the logical move to begin to have production offshore? Because just making them here and shipping them there just doesn't seem terribly efficient.
Yeah, for Tesla, it is right now a balance of cash and balancing the growth of the business versus the demands of being profitable. Tesla has put its efforts right now to build a factory in China, where the world is really in a huge race to get electric vehicles there. And there's been talk about doing one in Europe as well. Norway's an interesting place. A lot of government incentives on electric vehicles there at the federal level and at the local level to incentivize people to get into electric vehicles. You see that here in the U.S., where the incentives are being phased out for Tesla vehicles, and questions about, well, does that make the Model 3 too expensive without that?
Tim, it's Dagan McDowell. I had a conversation over the weekend with somebody I'm really close to, works in the technology industry, about how every major automaker in the world, even luxury automakers outside of Tesla, they don't employ anybody who really knows how to write software. The interfaces on these cars are glitchy and awful. I don't care if it's a Ford or a GM or even a BMW. Where is that opportunity for tech companies? It just seemed, I'm kind of dumbfounded by the fact that some major tech company other than Tesla hasn't come along and bought an automaker or really tried to make a car that appeals to millennials, because millennials don't really care, I don't think, about the way the wheel feels. They care about the ease of connectivity between the phone and the car interface.
Well, you're hitting on a huge issue that's facing the automotive industry. As cars become more commoditized, move towards electrification, and we're not talking about horsepower and that sort of thing, the real way that car companies think they're going to differentiate themselves is through that touch, through that screen, through the digital interface. And, if you look at the history here, that's been a struggle for them. So you look at companies like Google and Apple really trying to push their way into the car, into that digital ecosystem. It could be a potential threat for car companies around the world. You see some car companies investing in software development, but they don't have a culture of that kind of development there.
Meanwhile, the National Highway Traffic Safety Administration is looking into car companies Hyundai and Kia. What do you make of this story? The automakers had vehicles spark non-collision fires, Tim, injuring more than 100 people. How serious is this?
Well, it's quite serious. A number of people involved in this, and it comes on top of a previous recall by those car companies regarding fires. The Attorney General in Connecticut has suggested that they are doing an investigation into the way these companies have been doing recalls. What investors are, it makes them jittery, and analysts are trying to figure out what's the ultimate cost going to be on something like this. We've seen in past recalls that as car companies try to go to more commoditized parts and try to use more of the same things across their lineup, that you start to see one recall and it just all of a sudden it explodes into huge numbers, which can be very costly down the road.
All right, we will leave it there. Tim, it's great to have you this morning. Thanks so much.
Thank you.
Tim Higgins joining us.